President Trump, in his weekly address to the nation, announced plans for the largest tax cut in U.S. history, the most sweeping tax reform since 1986. Mr. Trump said 95% of Americans would file a one-page return if his plan was enacted and that tax rates would fall. The president's remarks came 3 days after key Republicans on the Senate Budget Committee announced that they had agreed on a $1.5 trillion tax cut plan for the next 10 years. Pennsylvania Senator Pat Toomey's support of the tax cuts had been expected, but Senator Bob Corker of Tennessee had previously said he would only support tax cuts if they would not add to the $20 trillion national debt. Senator Corker's change in stance opens the way for Senate passage, but to become law, the bill must be approved by a majority vote in the House of Representatives, where its fate is in doubt. House Majority Leader Kevin McCarthy and House Speaker Paul Ryan have long said they would only support revenue-neutral tax cuts that don't add to the nation's soaring debt, with Senator Corker now changing his stance, saying the massive tax cuts can boost growth sufficiently. It is conceivable that Congressmen McCarthy and Ryan could experience a similar change of heart. Senator Corker is calling into question the conventional wisdom of economists, as well as analysis by Congress's own nonpartisan research arm. Congressional researchers have long projected a day of reckoning will occur in the mid-2020s, but a massive tax cut could speed things up. The cost of Social Security, Medicare, Medicaid, defense, and interest are projected to rise fairly gently through the mid-2020s before interest owed on the national debt begins to accelerate sharply and becomes unsustainable. If a $1.5 trillion tax cut is added on top of the pile of debt shown here, it puts the nation on a faster track toward peril. Maybe it will take such a crisis to force lawmakers to prevent the national debt from soaring beyond what the U.S. can safely afford to pay back. If tax cuts are enacted this year, opportunities to reduce your tax bill could be substantial. Be prepared to review your investment gains and losses, deductions, and income before the year ends, and stay tuned to our channel for updates. We are independent professionals, authoritative analysts of wealth management issues. For continuing coverage of tax tactics at this important time, please subscribe to our email newsletter.